I know some of you are like, fuck, like, how are we ever going to get to live where we want to live? I was talking to one of our clients yesterday who's an absolute legend, and his partner was saying, well, there's this beautiful part on the beach in Perth that, you know, their dream home looks like about $2 to $2.5 million. And he was kind of like, you know, we want to work towards that, and so was she, but they were both prepared to wait 10 years until they could afford to do that, or they could afford to sell 2 or 3 houses with a big chunk of equity and move there with a lot lower debt. And, you know, it's really interesting to hear them say that versus some other people that I talk to that have just gone straight for that big asset first and now realizing that, oh man, like the market's not going up like I expected it to. Maybe I'm too far into this and I don't know what my options look like. I've been noticing quite a bit of media at the moment talking about housing affordability as a focus for both the Australian government, the state governments, and the local governments for the future. Now, in Australia, there are so many different perspectives on whether housing or real estate is affordable or it is super, super expensive. And what I wanted to start the video by saying is that it's a completely loaded question, and it's 100% relative to what you earn and where you are in your life stage. Now, there is no one Australian market. If you wanted to go out there like my auntie just did and buy a place in regional southeast Queensland, a couple of acres with a beautiful home on it and a pool for $200,000, then you can absolutely go and live that at the moment. Or if you're like some of my friends in Sydney that are spending $1 to $1.5 million buying their first home, then you can absolutely go out there and do that as well. But we've got to remember, when we're talking about housing affordability in Australia, we're really talking about some markets. Now, when I think expensive for me personally, I'm thinking Sydney's quite expensive, Melbourne's expensive, and then the sub-markets around them. There's parts of Brisbane and Perth that are super expensive too, with the beautiful regional markets. So there's parts of the Sunny Coast, Gold Coast, the Mornington Peninsula, Geelong, Wollongong, the Central Coast, and northern New South Wales. And for some people, those destinations are already completely out of reach based on their current situation. But long-term, those destinations, as they grow in population, they grow in jobs, they grow in infrastructure, and they grow as a brand for a lifestyle destination, may go from strength to strength to strength. Now, I've got a couple of clients in Byron Bay at the moment, and every single time I talk to those guys, they're like, my house price has gone up by 200 or 500 grand like every year at the moment. And I'm like, how long can this last? And then they're like, well, Zac Efron just paid $10 million to buy a piece of land up there and he's going to build a house. And Chris Hemsworth is doing the same thing or just did the same thing. And Pat Rafter's just done the same thing. And you go, well, maybe this destination becomes more like a destination in the south of France or a really nice place in America or a beautiful place in Europe where it becomes more than what the local economy can afford, and it becomes a specialist place where the rich and famous come and play, and that becomes their holiday destination. And because of that, prices will go up for as long as people are prepared to pay them, like in London and New York as well, where you see the beautiful penthouses. There are other parts of Australia that are just so affordable now, it is not even crazy. You know, parts of Brisbane and Perth, according to CoreLogic, are cheaper than they were to buy 12 years ago. You've got thousands and thousands of regional towns that are just crying out for people to move to them with ridiculously cheap property prices. Like, I've seen prices in some of these towns, talking to clients inland of the Sunny Coast, for example, where you can buy a beautiful home on a big block of land for $90,000, $100,000. So there are so many options around. It is 100% relative. Now, if you're earning $1 million a year, then what is affordable to you might be very, very different to me. For example, when I started out earning $50,000 per year when I bought my first property. So I could never have imagined owning $1 million home or anything like that back then, because the bank made it really clear what I could borrow and what I could do. But what I chose to do, and everyone in 2011 when I was starting to buy was like, Sydney's so expensive, we've just gone through the GFC, it's the worst time to buy assets ever. I was like, well, I can borrow the money. There were some really good government grants around at that time. And I thought that, you know, the bank told me I could borrow this much. I could buy a unit with water views, you know, in a good part of the south side of Sydney at that time for 360 grand. And like a lot of people are now, I just thought that was affordable for me. It's what the bank said I could do, and I jumped in. But I didn't try and overextend myself. I didn't go straight for the dream home or straight for the super expensive property. And I think that's one of the challenges we face now. Everybody wants it today, and not a lot of people are prepared to put in that work that it takes and to delay that gratification over time to get to where you want to be. Because the thing I've learned about property investing over the last 10 years, having bought 13 properties now for myself, is that it's a slow, one step at a time approach, as opposed to this rushing in and getting everything you want today. And I think after reading Michelle Obama's book, Becoming, she said it so beautifully, which is you can have everything you want in your lifetime, but just not all in the same day. And I really appreciated and respected that. So what I thought would be cool to discuss is whether you think the Australian market is super, super expensive and bubbly and overvalued, or it's super undervalued and cheap right now. I want to talk about where it's heading and where you can find really good quality information on this to make up your own mind. Like, your job isn't to listen to me and go, yes, Ben knows his stuff. It's to go, I'm going to take this little idea from Ben and these few other people and these few other resources and analysts, and I'm going to make up my own mind and decide if it's a good time to invest or buy, or if, hey, I'm just going to sit out of it for a while and see what happens, which is completely cool as well. One of the resources that I love, which is free, is the Heron Todd White, HTW, month in review report. And you can just Google that, it'll come up. And then you can look at where Sydney, Melbourne, Brisbane, Perth, Sunshine Coast, Gold Coast, Mornington Peninsula is, or Kingaroy in Queensland. You can really break it down to a granular level. They will sort of show you the overall timing in terms of where they see it, and that's updated every month. And that's constantly changing as well as the market shifts and sentiment shifts and finance shifts and, viruses come and go. All of those things come into play with property. Another great resource that I follow is CoreLogic. Now, they do a really, really simple month in review or monthly update through their YouTube page. I just can't even believe the small number of views for how high quality the information is. It's completely free. I also subscribe to their blog, which is incredible, and I read all of their articles too. Tim Lawless over there is doing a great job at collating all of that data and then bringing it in a way that you can make better decisions with. Also, definitely follow everything Commonwealth Bank has to say at the moment. They've been so incredibly accurate in the last year of identifying where the market's at, where it's going, and letting me know where the government's head's at and the market's head's at 2, 3, 4 months in advance, which has been very helpful to navigate through this market we're in at the moment. I also love SQM. They're another big analyst, produce incredible reports on long-term capital growth, vacancy rates, as well as areas that look good, and really deep ripping apart cities and stuff too. Now, there's so many other good resources we follow too, but they're some of the biggies, and you can get a bit of an idea after reading some of their stuff in terms of where, if you're Sydney or Melbourne or Perth, where those markets are going short-term and long-term, and make a better decision. Now, I use their information as well as Phil Anderson's, Ray Dalio's, and Fred Harrison's in 2016 to see that a top was coming in Sydney and to sell my property there and on the Central Coast, as well as identified that we're in a bottom in Brisbane, and I've started to buy some assets here in the last few years as well. So you can use this data to make much smarter and much clearer and better decisions. And again, if you were to look at Brisbane and go, well, Brisbane has an average house price of $500 and whatever thousand dollars, but there are prices selling for 3 mil, in fact, up to 12 million, and there's houses selling for 150, 200K. It's not just Brisbane is expensive, there's parts that are super cheap and maybe there's a reason for that. There's parts in the middle that represent good value that are like the hidden gems. And then there's probably parts that you've missed the boat on that have gone absolutely nuts. And maybe 5 or 10 years of growth has already been priced into those markets. And it's the same with Sydney or Mornington or Geelong or wherever you're thinking of investing. What I wanted to remind you, if you get emotional about this stuff like I do, is that property investing is actually just a vehicle to create financial freedom and choices in your life. Now, nobody's sitting there with a gun to my head going, Ben, you need to invest in Brisbane or Sydney or Melbourne, you need to buy property and that's the only way to get financially free. You could do it through your job, through saving, you could do it through super, you could do it through a business, a side hustle. You could do it through property, shares, stocks, commodities, cryptocurrency. There are so many different niches that you could specialize in. But I don't know anyone who looks across all of those things and actually gets financially free in a shorter period of time than 30 years, because it's just too hard to have a great strategy if you're looking at everything and dabbling little bits in everything. Now, I know Ray Dalio's book, Principles, talks about it's nice to have a diversified portfolio, and I 100% agree with that. The more income streams that are passive that you have in life, the more protection you have from the ups and downs in markets. But Ray Dalio didn't start with that portfolio. He started with one thing that he was very, very, very good at, and he niched in that, got himself to a certain level of results and success and choices and freedom, and then from there diversified and grew and learnt over time. And for me, my niche is property. I'm obsessed with it. I love it. I love renovating it. I love building it. In the future, I hope that my passion stays there, but I'm not silly enough to shut the door on everything else and go, this is the only way. And I never want you to feel like that with our content or our videos, you know? It's what I'm interested in, it's what I'm doing, and that's why I love talking about it. If I knew more about stocks, maybe you'd be hearing me talk about that too. So in reality, whether you're using it as a vehicle to get you there by the time you retire, like I talked about in my videos last week, or you're using it to become a full-time developer, or you're using it to become financially free, it's kind of, again, irrelevant. It all comes back to your plan. And when we talk about planning, it really starts with getting super, super clear on 4 things. Now, the first of those is, where are you right now? What's your income look like? What's your savings look like? What's your borrowing capacity look like? What's your life stage look like? Are you about to have kids, or are you saving a lot of money at the moment? You know, what does it look like in the future? Now, 10 years ago when I was getting started, it was me and my girlfriend, who's now my wife, Lisa, living in Sydney, you know, paying mum $100 a week for food and board and saving every single dollar that we were both earning. And therefore it was very, very easy at that time to buy a property because we could just save all this surplus money, even though together we were earning way less than $100,000. Fast forward to today, I've got 3 young kids, 2 of them in private school, 1 of them in daycare. I've got businesses and costs there. I've got more investment properties. Some of them are positive, some of them are negative, which cost me money. I've got projects that I'm looking to do on top of that, you know. So I don't have like this incredibly easy way to save a whole lot of money like a lot of you first timers do. And I know there's heaps of families out there in the same place where they're sort of, hey, how are we going to do this while we're going through this stage of life? So once you've identified where you are, very honestly, then you look at where you want to be. Now for me, that's super simple. I shut my eyes and I see a beautiful life in the future filled with choices for myself and my family. I see my life surrounded by friends. I see myself as healthy. I see myself as doing meaningful work like this and helping people like you put the dots together. And I see myself with passive income coming in so that I don't have to stress about money. Now, I'm not financially free from my properties at the moment because my wife and I decided that we'd slow down the journey and buy our own home, which we've got to obviously pay off before we can start moving forward with paying off our properties again. Now, whether you're going straight for the financial free jugular, like a lot of our clients do, and just getting it done, then worrying about their own home, or if you've already got your own home and you're like, shit, like how do I figure out this other passive income stream outside of that? You know, that is sort of the journey that I've gone through as well. So you want to be clear on where you want to be visually, but then you also want to be dead clear on the dollar amount. Now, I 100% want over 6 figures of passive income from the rent returns on my property within 5 years from today. Whether I achieve that or not is another thing, but all I can do is set the intention and then do the work that it takes consistently to get there, which means for me, pay off debt. For other people, it could be to go out and buy a property so that in 10 or 15 or 20 years, they've got that option to have that 6 figures or 7 figures a year of passive income from their assets. But just get started and just get clear, because our brain is like a heat-seeking missile. And if you put out the intention, then it's going to figure out a way through videos like this and through your own planning to make it happen over time. The next thing you need to do is, and what nobody does, is look at what's holding you back. Now for me and a lot of my clients, questions come up all the time, like, is it the right time to buy an investment? Should I be buying or should I be waiting? You know, where should I be buying? What should I be buying? feeling overloaded with information, feeling overwhelmed, not having a team of advisors, not having anyone in your life to talk about with this stuff, being really, really leveraged and on an expensive home that you're living in, and therefore not having any extra money to save towards this, or not having any savings at all and just getting started, or not having a clear plan. All of those things are things that I've felt, and that 100%, if you're being honest with yourself, you'd be going through too. And that doesn't mean just because you're feeling those things, you can't slowly and confidently take little steps at a time like I have to get towards where you want to be. And it starts with the plan and the vision, and it finishes with you consistently showing up in a disciplined way around this area of your life, like you do with your family or your friends, or whatever part of life that you go all in and give your best self to. If you give that same self to property, over 15 years, your entire world and life will change. The last one is also extremely important, and that is where you want to buy and what you want to buy. So that comes down to which market, which city, which part of the city, which suburb, what type of property, what type of strategy. And those are things that in our strategy sessions, the one-on-one ones that we offer through our website, you can start talking to us about your plans, and we've got a worksheet that you can work through, which helps put the pieces in place so that you can see, with or without our support, where you want to go, and therefore start taking consistent and calculated low risk action towards where you want to be. Now, unfortunately, those sessions are only for people that are seriously thinking of buying in the next year, or that have at least $60,000 of cash or equity, just because we are getting so much inquiry at the moment, which I absolutely love. But for those of you who aren't already there, let's continue the conversation when you get to that point, which is a more closer to buy ready phase of your journey. Now, the last thing I wanted to finish the video on is whether you think it's expensive or not right now, there's an absolute golden rule that investors like Buffett and Ray Dalio talk about, as well as Tony Robbins in Money Master the Game. And that is, it's about time in the market, not perfectly timing the market. Now, if you can also learn how to time the market, you will do exponentially better than the average person. But even if you can't, just being in the market for long enough will get you to where you want to be. And I think about my oma. Now, that's the Dutch word for grandma, where obviously, well, not obviously, my brother looks a lot more Dutch than I do, but where from that background, that's where grandma was from, where oma was from. And I remember talking to her and Opa. He was an Australian English guy that somehow became an Opa as well, obviously who wore the pants in that relationship. But he was sort of saying that when they bought their property on the northern beaches of Sydney, just on the hill at DY there, for like $1,000, they thought it was so expensive. And at that time, that was 32 years worth of my grandpa's wage to pay off that property. Now, I know some of you are like, fuck, like, how are we ever going to get to live where we want to live? I was talking to one of our clients yesterday who's an absolute legend, and his partner was saying, well, there's this beautiful part on the beach in Perth that, their dream home looks like about $2 to $2.5 million. And he was kind of like, we want to work towards that, and so was she, but they were both prepared to wait 10 years until they could afford to do that, or they could afford to sell 2 or 3 houses with a big chunk of equity and move there with a lot lower debt. And, it's really interesting to hear them say that versus some other people that I talk to that have just gone straight for that big asset first, and now realizing that, oh man, like the market's not going up like I expected it to. Maybe I'm too far into this and I don't know what my options look like. And I've been there in the past, which is why I've sold a bunch of the expensive homes that I bought in the past, and I've got something within my means, because it takes a lot of the pressure off the household as well. But whether you think it's expensive or not, I can guarantee that 30 years from now, it's not. Whether you bought Sydney at the absolute top of the market in 2016, 17, and you're like, man, am I ever going to make anything here? Or am I going to start losing money? Whether you bought Perth at the top of the market 7 or 8 years ago, and you're sitting there going, oh my God, I've lost 30% here. Is it ever going to get back to that point? Whatever you've done, whether that was Brisbane 16 years ago or 12, 13, 14 years ago, when it went absolutely nuts and grew by 80% in 3 years. And since then, your property has done absolutely nothing. I promise you that if you're playing a 30-year game, everything is relative and everything is affordable now. But that doesn't mean you should go rushing out and buy the most expensive property and go, I hope that it works out. Within that and within this Australian market, there are absolute little diamonds, markets, cities, suburbs, properties that represent such incredible value now, that are not overpriced, that aren't going to cost you an arm and a leg, that can produce income and long-term growth, and that represent beautiful value. So wherever you are, I truly wish you all the best. If you're watching this online, please subscribe, please give it a thumbs up, please share this with someone that needs to see it. If you're listening to this on the podcast, come on, give us a 5-star review. I can't wait to hear from you. I can't wait to talk with you in the future. We're 100% here to support you. If you've got any questions, this is a zero hate channel, so anything that's negative, unfortunately, will be blocked, but anything that's positive, that's life enriching, that's building the character and quality of this community, we'd love to hear it, and I'll address that in a future video for you. But stay safe. I wish you all the best and good luck with your investment journey.